Preparing for a financial analyst at MassMutual interview? You've reached Candy Mentor, and this video is for you. We'll walk through 20 key questions you're likely to face. For each question you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. How would you define the role of a financial analyst at MassMutual? I would define financial analysis as turning business data into decisions about performance, risk, and capital. At MassMutual, I would connect that work to insurance economics. Premiums arrive today. Claims may be paid years later, and investment returns support policyholder obligations. I would analyze trends, assess assumptions, explain variances, and communicate recommendations clearly. The strongest analyst combines technical accuracy with judgment and a clear understanding of customer and regulatory impact. While answering, focus on translating financial data into decisions, supporting forecasting and reporting, understanding insurance economics, managing risk, communicating clearly, and connecting analysis to policyholder value and long-term business performance. Question 2. Why do you want to work for MassMutual? MassMutual appeals to me because its mutual structure creates a long-term perspective rather than emphasizing short-term shareholder pressure. I am interested in how an insurer balances policyholder promises, investment performance, capital strength, and responsible growth. The role also offers exposure to meaningful financial analysis across a complex business. I would bring curiosity, discipline, and strong communication, while learning from experienced professionals in an organization whose financial decisions directly affect customers. Make sure to cover MassMutual's mutual structure, insurance and investment businesses, long-term orientation, financial strength, culture, and why those characteristics fit your analytical interests and career goals. Question 3. Walk me through the 3 financial statements and how they connect. The income statement shows revenue, expenses, and net income over a period. Net income flows into retained earnings on the balance sheet and begins the operating section of the cash flow statement. The balance sheet presents assets, liabilities, and equity at a point in time, while the cash flow statement explains changes in cash through operating, investing, and financing activities. I would always check that ending cash reconciles and that the balance sheet balances. In your answer, explain the income statement, balance sheet, and cash flow statement, then show how net income, working capital, depreciation, retained earnings, and cash reconcile across the statements. Question 4. Which financial metrics would you monitor for an insurance company? I would monitor premium growth, policy persistency, claims or mortality experience, expense ratios, investment income, operating earnings, liquidity, and capital adequacy. I would also distinguish growth from profitable growth, because new premiums can be unattractive if pricing or underwriting is weak. Trend analysis matters more than a single period, so I would compare actual results with budget, prior periods, and relevant peer or management benchmarks before drawing conclusions. Be sure to mention premium growth, persistency, claims experience, expenses, investment income, capital ratios, liquidity, profitability, and the distinction between reported results and underlying operating performance. Question 5. How would you analyze a budget to actual variance? I would first quantify the variance and determine whether it is favorable or unfavorable. Then I would separate volume, price, mix, timing, and assumption impacts. For example, an unfavorable expense variance might reflect hiring delays reversing, vendor pricing, or a one-time project. I would validate the explanation with source data and business owners, assess whether it affects the forecast, and communicate both the root cause and recommended action rather than simply reporting the difference. Focus on quantifying the variance, separating price, volume, timing, mix, and assumption effects, investigating root causes, assessing whether the issue is recurring, and recommending an actionable management response. Question 6. How would you build a financial forecast? I would begin by understanding the business drivers rather than extrapolating totals mechanically. I would review historical trends, seasonality, current performance, management assumptions, and external factors. Next, I would build a transparent model with base, upside, and downside cases, documenting inputs and sensitivities. After reviewing it with stakeholders, I would compare actual results against the forecast, investigate errors, and update assumptions while preserving a clear audit trail. Discuss understanding business drivers, gathering historical data, selecting assumptions, modeling scenarios, validating with stakeholders, comparing actuals to forecast, and updating the model transparently as new information arrives. Question 7. What is duration, and why is it important for MassMutual? Duration measures a bond portfolio's sensitivity to interest rate changes, while maturity only identifies when principal is repaid. As a rough approximation, a portfolio with 5 years of duration may decline about 5% if rates rise 1 percentage point, before considering convexity. For MassMutual, duration matters because assets must support long-dated policyholder obligations. Matching asset and liability duration can reduce reinvestment, market value, and liquidity risk. Explain duration as interest rate sensitivity, distinguish it from maturity, discuss price impact from rate movements, and connect asset liability matching to liquidity, solvency, and long-term insurance obligations. Question 8. How would rising interest rates affect an insurance company? Rising rates can initially reduce the market value of existing bonds, potentially affecting capital and unrealized gains or losses. Over time, however, maturing assets can be reinvested at higher yields, improving investment income. The impact on liabilities depends on product design, discount rates, and policyholder behavior. I would therefore analyze asset and liability duration, liquidity needs, surrender activity, capital sensitivity, and whether higher rates improve new business profitability. Cover effects on bond valuations, reinvestment income, liability discounting, policyholder behavior, capital, new business economics, and the importance of separating short-term mark-to-market effects from longer-term earnings benefits. Question 9. What is the difference between generally accepted accounting principles and statutory accounting? Generally accepted accounting principles is designed primarily to present performance and financial position to investors and other external users. Statutory accounting is designed to protect policyholders by emphasizing conservative solvency measurement and available capital. The two frameworks can differ in asset valuation, reserves, deferred costs, and income recognition. At an insurer, I would understand which framework supports the analysis, reconcile major differences when necessary, and avoid interpreting one measure as a substitute for the other. Explain that generally accepted accounting principles emphasizes investor-oriented financial reporting while statutory accounting emphasizes insurer solvency. Discuss valuation and reserving differences, and note why analysts must understand both perspectives. Question 10. How would you evaluate an investment opportunity for MassMutual? I would evaluate the opportunity on a risk-adjusted basis, not simply by comparing headline yield. I would examine expected return, credit quality, duration, liquidity, concentration, capital charges, and correlation with existing assets. I would stress default rates, spreads, interest rates, and cash flow timing, then compare the asset's behavior with policyholder liabilities. Finally, I would confirm that the recommendation fits investment guidelines and supports long-term policyholder obligations. Mention expected return, credit and market risk, liquidity, duration, diversification, capital requirements, asset-liability fit, downside scenarios, and alignment with investment policy and policyholder obligations. Question 11. Tell me about a time you used Excel to improve an analysis. In a university finance project, I replaced a manual monthly report with an Excel model using structured inputs, XLOOKUP, SUMIFs, pivot tables, and variance checks. The prior process took several hours and was vulnerable to inconsistent formulas. I separated assumptions from calculations, added error flags, and reconciled totals to the source file. The report became faster to update and easier to review. That experience taught me that a useful model must be controlled, transparent, and practical. Use a specific example with the original problem, tools or formulas used, validation steps, measurable improvement, and the business result. Emphasize controls and usability rather than complexity alone. Question 12. How do you ensure accuracy when working with large financial datasets? I use a layered control process. First, I confirm the source, reporting period, definitions, and population. Then I check duplicates, missing values, data types, totals, and outliers before calculating metrics. I reconcile outputs to an independent source or prior period trend and document transformations clearly. For important work, I ask for a peer review and preserve the original file and version history. Accuracy is not just finding errors, it is making the process repeatable. Discuss source validation, reconciliations, documented transformations, reasonableness checks, duplicate and missing value testing, version control, peer review, and maintaining reproducible processes. Question 13. Describe a time you had to explain complex financial information to a non-financial audience. I once explained a budget variance to a student organization leader who was uncomfortable with financial terminology. Instead of leading with accounting classifications, I showed a simple bridge from budget to actual and identified the two operational decisions driving the difference. I used plain language, paused for questions, and confirmed the next actions. The leader understood the issue and adjusted spending. I learned that effective communication starts with the audience's decision, not the analyst's preferred vocabulary. Choose a concrete example, explain how you simplified the message, used visuals or business language, confirmed understanding, and linked the analysis to a decision or action. Question 14. How would you prioritize multiple urgent requests from senior stakeholders? I would quickly clarify each request's deadline, decision impact, dependencies, and required level of precision. Regulatory, customer, or executive decision items would generally take priority over lower impact reporting enhancements. I would estimate effort, identify reusable work, and communicate trade-offs rather than silently missing a deadline. If priorities conflict, I would ask my manager to confirm sequencing. I would also provide interim outputs when useful, while protecting essential validation and review steps. Cover clarifying deadlines and business impact, distinguishing regulatory or decision-critical work, estimating effort, communicating trade-offs, confirming priorities, and maintaining quality under pressure. Question 15. What would you do if your analysis contradicted a senior manager's expectation? I would first recheck the data, definitions, formulas, and assumptions to ensure the contradiction was real. Then I would present the result respectfully, using a concise bridge that shows what changed and why. I would invite the manager to share additional context or information I may have missed. If the conclusion remained different, I would document the analysis and recommendation. For a material reporting or compliance concern, I would follow the appropriate escalation process. Emphasize respectful challenge, checking assumptions and data first, presenting evidence clearly, inviting discussion, documenting conclusions, and escalating appropriately if material risk or reporting integrity is involved. Question 16. How would you assess whether a forecast assumption is reasonable? I would test the assumption against historical performance, current operating indicators, management commentary, and relevant external benchmarks. I would also check whether it is consistent with related assumptions. For example, premium growth should align with distribution capacity and retention. Sensitivity analysis would show how much the conclusion depends on that input. If uncertainty were high, I would use a range rather than false precision and clearly explain the risks to decision makers. Mention historical evidence, management input, external benchmarks, operational drivers, sensitivity analysis, consistency with related assumptions, and whether the assumption remains credible under downside conditions. Question 17. What is asset liability management, and why does it matter? Asset-liability management coordinates investments with the timing, amount, and risk characteristics of policyholder obligations. I would analyze duration, cash flow matching, liquidity, interest rate sensitivity, reinvestment risk, guarantees, and expected policyholder behavior. The objective is not to eliminate every risk, but to ensure the portfolio can meet obligations across market scenarios while earning an appropriate return. Strong AM supports solvency first and profitability second, especially for long-duration insurance products. Explain coordinating asset cash flows and risk characteristics with liabilities, including duration, liquidity, interest rates, reinvestment, guarantees, and policyholder behavior, while connecting AM to solvency and profitability. Question 18. Tell me about a time you made a mistake in an analysis. In an internship, I initially referenced the wrong month in a variance analysis because two source tabs had similar names. I caught the issue during a reconciliation to the general ledger before distribution. I corrected the workbook, notified my supervisor, and added a period control cell that drove the formulas and displayed the reporting month prominently. The mistake reinforced that good analysts use preventative controls, not just final reviews, and communicate quickly when something needs correction. Be honest and specific, explain how the mistake occurred, describe the control that caught or corrected it, quantify the impact if appropriate, and show what process improvement followed. Question 19. What would you do if you noticed a possible compliance or reporting issue? I would preserve the underlying records, verify the facts and reporting requirements, and avoid changing data simply to make results appear consistent. I would document what I observed, the potential impact, and the steps already taken. Then I would promptly raise it with my manager and the appropriate control, compliance, or accounting team. My responsibility would be to provide accurate information and follow escalation procedures, even if the issue creates additional work or an uncomfortable conversation. Focus on preserving evidence, verifying facts without altering records, avoiding unsupported conclusions, promptly informing the appropriate manager or control function, and prioritizing transparency over convenience. Question 20. What questions would you ask us at the end of a MassMutual Financial Analyst interview? I would ask which decisions this analyst most directly supports and what distinguishes strong performance during the first 6 months. I would also ask how the team partners with actuarial, investments, accounting, and business leaders, and which systems or reporting processes are being improved. Finally, I would ask how the team balances growth, risk, and policyholder value. Those questions show that I am evaluating both the work itself and how I can contribute effectively. Ask thoughtful questions about role priorities, team interfaces, training, success measures, analytical systems, business challenges, and how the position contributes to policyholder outcomes and long-term financial strength. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.